Okay, hello YouTube. Scott Tucker here with Military Retirement Live. Uh, Coming with a bit of a short notice episode, but I wanted to do this because I know this question is going to come up because it immediately came to mind after last night's news about everything going on in Europe. I remember when I first got into this industry, I was kind of working under this certified financial planner who had been in the industry for 20 years, and he was over in Europe in the 90s. And he was telling me about right before the Gulf War kicked off that everybody wanted to get their life insurance before they got deployment orders because that was an important factor. And there's other factors when it comes to life insurance. I mean, obviously, that's the reason why a lot of military benefits, such as service members group life insurance and survivor benefit plan and dependency indemnity compensation, these things exist. But at the same time, it's like we've kind of been at war for 20 years. And if you really look at the statistics, I mean, yes, it's dangerous, but compared to the way it's fought now versus in the past, insurance companies look at this stuff differently. Everything's changing, census data, survivabilities, and all that. But anytime the media is brings these issues more to the forefront than they have been in recent years. Of course, as units start deploying and stuff, these questions do come up. So figured, hey, we might as well get it out in the open. So um, got a couple people joining us today. Gary Redmond, Mike Seabolt. Gary, as you've seen from other episodes, is currently a pilot and going through military transition himself. And Mike Seabold works with me as our kind of insurance consultant design, giving us access to the various products, vehicles, and really the ins and outs of how the industry works and how the various products and tools work. So when it comes to these type of topics, um, he can, if it doesn't know the info offhand, obviously knows the people to talk to and bring into the conversation. So we're not going to answer all the questions today, but I know they're going to be coming in. So we wanted to start the conversation. Gary, I'll start with you. You're the one's been in 20 years, probably deployed a lot of times.
Yeah.
Somehow what's going on right now feels a little different. I know we're not going to get involved, wink, wink. But
Yeah.
that deployment order thing, you're a pilot, your situation's different. But ultimately, I did this question come up? War life insurance, or did it kind of get wrapped in? Where is it in the zeitgeist of the average active duty service member
Well,
today?
it's not. You go in for the. I think for the most part, it's not right. You walk into your admin office and you sign your SGLI, and hey, I'll take the maximum 400,000, and then I want. I don't think about it. I didn't really think about life insurance, to be honest with you. Not even when I got married. I thought about it more. We had our first daughter 2 years ago, and that's when both of us saw like, hey, maybe we get some life insurance. And to be honest, the process, that I went through, it's a little overwhelming as far as how to understand, you kind of have to do things strategically. And, the universal life versus term versus whole life insurance. I mean, when you look at the numbers, it's a little bit overwhelming and hard to understand at times. And
Mm-hmm.
especially when you're looking at it as, I'll give you an example. If you call somebody like Policy Genius and, you're like, well, a standard $1 million policy will be $50, but a month for a premium, but you're an aviator. So now that's, $250
Yeah.
a month. Well, I'm not always going to be an aviator. When I retire, I may not be flying. So it kind of depends. I just had this conversation with a buddy of mine that's a United pilot and a reservist. Last week, he's going through the same process of trying to figure out like, what's the happy medium, who should I go with? And the other piece of that for my piece that I'm actually struggling with it now is like, strategically, I haven't had my retirement physical yet for the VA. So
Mm-hmm.
it's like, do I up that policy? Do I get a different policy before I go through that process and they find something that, potentially
Right.
is not insurable or is going to cost me a lot down the road?
So, but what about specifically, this concept of going down range versus being back home in a job. I mean, and Trevor, I know you went down range a lot, and so kind of the topic here today is given what's in the news right now, how do you guys what do you think the current mood is around this topic, specifically around like, oh crap, I might get deployed. You know, am I concerned about this more or not? I just because I remember, like I said in the beginning, Trevor, you weren't on yet. The first guy I was with, he was talking about when the Gulf War was about to kick off and nobody was quite sure. Everybody was really worried about this topic, and so it's 20 years ago, or gosh, 30 years ago. Sorry. So where we've been doing this for 20 years now, going down range. Are people just kind of generally okay with the SGLI and whatever they might have gotten term on the side? Does it tie into current events at all? And specifically, what if it does? What questions do people have that Mike might be able to answer?
Well, I can speak personally from the Navy side of the house. Like Gary knows this because, along, I guess you could say the Marines too, but we're more of an expeditionary type of force, being that you're constantly deploying. Um, you know, you're always in some sort of cycle if you're in a deployable status.
Mm-hmm.
So this is one of the topics that they cover a lot pre-deployment from a readiness perspective is like, hey, make sure you get, but the bad part is they're just giving blanket advice. They're not sitting down and learning like on an individual basis, like, hey, what's your current situation? What do you need? And I, Paul, I'm upstairs I'm not going to say why I'm in the playroom, but, I had to get kicked out of the downstairs to come up here. Anyways, yeah, they're not taking the time to learn about it. They just come in and they say, "Oh yeah, you need a $1 million this or that." Well, what are you basing that off of? Because a lot of the times the advice they get is from somebody who's a radio talk show host or they're not like somebody who actually knows like how do I determine what your needs are,
Yeah.
right?
Yeah.
They just say $1 million because that sounds good. Well, what if you need 2 million? You
Right.
know, a personal story. Like I was, talking to a family member of mine who just started working and is making a lot of money and went and talked to an insurance agent and the insurance agent said, yeah, do this, $500,000 term and $250,000 whole life. Well, when I sat down with them and we looked at it, just based off of their salary, I was like, you probably need like 10 times that amount,
Hmm.
right? To really replace that income stream, which is kind of what we look at as like, hey, based off of your situation, your needs, your current liabilities and assets, like how much do you really need? Instead of just saying, yeah, just go out and get 10 times your salary. If somebody tells you that, you should probably turn around and walk away.
Well, Mike, I mean, kind of rule of thumb in the business was replacing income, doing some sort of calculation, but then you start hearing about people getting sued because they didn't sell somebody enough insurance, and it's just like, wait a minute, what's going on? It's so yeah, there's that aspect of is there enough, but when it comes to these military focused topics, we've got a couple limitations when it comes to, or any insurance insurer has. And so those include the amount you can get it covered for. So that enough thing might have limits that you need to be aware of, and try to figure out alternatives to covering that. There's also the issue of your regular military job. Some pilots, special forces have different situations they need to be aware of. And then, of course, are you traveling overseas somewhere that might not be the more favorable thing for having on a set of orders while you're going through an application process? So, Mike, we don't have to go into super detail. We can wait for specific questions and talk about in future episodes. But just I know this is kind of top of mind to folks. Can you give a little bit more on those topics?
Yeah, I'm happy to. Thank you so much. So, underwriting with life insurance companies is based upon, as we talked about, one of the factors that's going to judge the insurability is the income. Another factor is the age of the insured. A third factor is the net worth of the insured. A fourth factor is the number of dependents related to that insured. So all those kind of go into the mix together. The younger you are, the more of a multiple the insurance company is comfortable with. from a life insurance perspective. And so that's all the defensive side of the table, right? So term insurance is super cheap for a reason. Term insurance is super cheap because very few people use it. The math is in our industry, 2% of term insurance death benefits actually pay out. 2%. 98% expire or lapse because it's no longer needed. And that's okay. That's why it's cheap, right? That's why we spend a couple $100 for a couple $1 million.
Yeah. And so just to interrupt you real quick, and that's the same stat or a similar stat even for service members group life insurance over the last 20 years. You can look at how much Prudential took in versus paid out. And really, service SGLI is also term insurance, but it's there because everybody can qualify for it. And so that's a question you get a lot. What, is there a war clause? And even I need to update, the insurance companies keep changing what that means. I think it meant something very different years ago versus what it means. Is that really a thing now? Or if the idea is, it's kind of like hey, if you're on a pilot today and you're approved and you become a pilot tomorrow or even get cancer tomorrow, you're approved for the contract that you're approved for. And that goes for the same, if you had insurance before you even joined the military, they would still honor it, correct?
Yeah, that's true. Really, the only variable there as it relates to denying a claim would be, two areas. One would be improper information provided during the underwriting process. You didn't necessarily disclose that you're on your fourth triple bypass, but then they didn't ask about it. And then you die of a heart attack. Well, that's going to be an issue. The other challenge that we have to be aware of is suicide. That's really what it comes down to. So there's usually a 2-year contestability suicide clause. So if you die or commit suicide within a 2-year period of taking the life insurance policy, now year 3, they're probably going to pay it. So yeah, that's part of the equation for sure.
And what have we learned in the last few years? I mean, I've been seeing John McCaskill's posts on LinkedIn the last few weeks, doing 22 push-ups. These are effects of war. The effects of war, the mental effects of war, unfortunately, but rightfully so, from an actuarial standpoint, underwriting have a huge impact in your ability to apply for life insurance. So you need to be very cognizant of, what medical help, mental help stuff you're getting and how that's getting documented. And I'm not saying don't go get the help. Of course not. The documentation, unfortunately, is another wound of war. That it's causing extra financial hardship when people are thinking they're getting extra benefits, and it can cost elsewhere. And we see that so often. I just got a long email from a guy today who was told to reach out to me because he thought he had declined SBP, and turns out he didn't, and they won't give him his money back, and he doesn't know how to get out of it, and he's just super frustrated. I mean, he wrote me a long email, just super frustrated, and I had to be like, sorry, I don't know, the rules are them be the rules, like everything else in the military, and they don't tend to reimburse well. And so this tends to be
sure take it away quickly, but they don't reimburse it as fast.
Right.
Actually, Scott, I think this happened to us back in December too, because that was a situation similar to me. I thought like, okay, I had done everything I needed to do to opt out of survivor benefit plan when I retired, and then I looked at my retirement LES, and they were still taking money out. So I reached out, and I'll get that info. We'll make a post about that too.
Because I don't even know I mean, that's, I know there's a process to do that, but it'd be interesting to hear, like, the person you talked to this morning, and like, where did that hiccup happen, and then what's the actual process for?
Yeah.
I mean, we know what the process. There's a notarization that happens at some point where the spouse has to notarize their signature to deny or opt out of the survivor benefit plan. And so that's what I asked him. The question was, did that process happen? Because he was saying, oh, the box was checked, or I didn't see it. I didn't know I was automatically opted into it. And so without properly, and then, check it up on it, because I know people that have properly opted out and still, now they'll fix those ones if they can prove that's opted out for, but beyond that, you've got between the 25th and the 36th month. So there's one little window uh, to get out of it. But think about all the thousand things on your checklist when you're going through military retirement, and this SBP is just one little thing on the checklist. Let alone when you're going through your um, your 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 new duty station, you're getting onboarded, and one of the places you got to go is to get your SGLI signed off on, right? And to make it, and it's just another thing. It just seems obvious. Nobody talks about if it's the right amounts or what happens when you get out of the military and it just goes away. And so these combined issues, I think, just add up to not really, honestly, they're there kind of for everybody as a quote unquote benefit, but I think it leaves a lot of people lacking for all the things we discussed. But guys, I know this is kind of a last minute topic stuff, so I don't want to just drone on and on, but I did want to just see what kind of was in your guys' mind as this came up, as we wait for kind of more questions to roll in. But Mike, anything else you want to add before we
Yeah,
jump
so
on?
I guess I think it's important that we touch on life insurance in general. And I was just kind of
Sure.
going down this path earlier. Again, term insurance is a great vehicle for that short-term protection. That's why it's there. 40s to 60s, kids are young. Buy a couple $1,000,000, cost you a couple $100 a year, protects you against getting hit by the proverbial bus. Again, 2% of those you're going to get hit by a bus. 98% you're just protected in case it happens. But what we have to really, I think, have clients think about life insurance a little bit differently as an asset class, right? And we've talked about this, and I think it's important to iterate that when people think of life insurance, they generally think about what happens after I die. I need X amount of dollars to protect my family after I die. What's the least I got to pay for it? I'll pay as little as I can and get as much as I can. And that, what we're working to do in our firm is change that thinking a little bit, right? We think about life insurance not based on what happens after I die, but what happens while I'm alive. And really, life insurance for the living, not the dying, a little tongue in cheek, but it's important. And while I'm alive, what that translates into is cash value, tax-free and accessible, liquid, et cetera. No 59 and a half, no 72 and a half, restrictions, and long-term care. So today's life insurance policies, the death benefit also is a long-term care policy for the insured while they're alive, right? So that's kind of the direction of the industry. So when we get clients to think about life insurance, less about what happens after they get hit by a bus, but more about what it can do for them while they're alive, their mind shifts. They're thinking about the life insurance contract shifts. And now they go from what's the least I got to pay and get as much as I can to I like this fact. I like the fact that my money grows with the market. I like the fact that there's no downside risk. I don't have any risk of loss, particularly in this tough market environment we're in right now. I like the accumulation. I like the tax-free. So when I think about it like that, I go from what's the least I have to pay to how much can I put in? How much can I fund this life insurance retirement plan vehicle for my living life, not my dying life? And so that's just, I think that's important to keep in mind.
No, absolutely. I mean, because really the term is the easy addition to something like a survivor benefit plan or SGLI while on active duty. But again, the terms run out, so now we're sitting in the same problem later in life when those percentages sadly eventually do change because two things we know about in life: death and taxes, right? So that's the reality. I mean, that's what we're doing here at US Vet Wealth. That's what the idea here with this show. So please subscribe if you're going through military retirement. Yes, these are the things that we do for our business. This is a way to let people know about us. But at the end of the day, it's more just the undereducation on these topics. Here's the goal that we're trying to get out. Just Google it more. Uh, Google this stuff more. It's fascinating how few do. Then they end up at a point whether it's, oh, I'm about to go down range. I don't have enough insurance. It's too late to get something. I'm about to get out of the military. I want to replace survivor benefit plan. I got something on my medical records. I just went through VA disability and I got the sleep apnea like everybody else. Quick sidebar on sleep apnea. Get it, but it'll cost. You'll get the extra benefit, but it's going to cost you when you're applying for insurance, right? So the timing there, these are factors. Not everything common misnomer about VA disability. If you're 100% disabled or something, that you're not going to be able to qualify for. One has nothing to do with the other, honestly. But there are factors involved that affect cost and stuff, and so it's just you never know what's going to happen, so on and so forth. So the shtick. But well, cool guys. Well, I think we'll cut it off there. I'm curious. Actually, I just want to get back and see what's going on Twitter. It's just this is getting kind of nuts. But all right. Well, thanks for joining real quick, and give it food for thought. If there's anything you want to dive into deeper next week, let me know, and we'll jump on. And for those watching and listening, appreciate joining us. We had a few people watching here on short notice. So thanks. Hopefully this is helpful, or at least brought some ideas and topics up. And happy to discuss any other topics, specifically around military retirement. We want this to be the hangout. If you want to come on, share your story, ask some questions. It doesn't always have to be about finances. Everything's going to add to your wealth, right? That's the idea here. It's about your time, your sense of well-being, and family and that kind of stuff. Money's just one of the tools to get us there. But all right, we'll call it a day. Thanks again for joining us, everyone.
Thanks, Scott.
Yes.